Hey guys, if you ever heard of the words testing the waters, what that means is now, and you weren't able to do this in the past, you can start marketing, talking to potential investors about opportunities that you still have that are coming together. There are certain requirements behind that. Number one being, hey, you're not asking for any binding commitments. These are non-binding commitments. You're not asking for money. You're not accepting money. You're still working on the deal. I say that very specifically. Any written materials that you put out to the world, whether it's emails, pitch decks, or otherwise, you have to have certain disclaimers in there that really say the exact same thing I just did. It's non-binding indications of interest to potentially invest into your opportunity. These disclaimers, just click the link below. You'll be able to download this information so that you can use it on social media posting. You can use it on your business plans. You can use it on anything that you're sending out to potential investors. And just to explain a couple extra things, it does not matter if you ultimately end up doing a Regulation D, Rule 506B, which you're not allowed to generally solicit, but I'll explain. You can also do it if you're doing a Regulation D, Rule 506C, Regulation CF, Regulation Crowdfunding, or Regulation A. For any of these, you can get out there and start testing the waters to really see if any investors are potentially interested in investing with you. Now, with the 506B, of course, you are not allowed to advertise those types of offerings. And just a quick recap, Regulation D 506B allows you to bring in at least 35 sophisticated non-accredited investors for every offering that you have, unlimited amounts of money from accredited investors. Those are the high net worth investors. But what you're not allowed to do is advertise. They call this general solicitation. You can't put it on social media. You can't send it on just email blast. You have to have a prior relationship with your investors. And in this case, if you're testing the waters, it is so much more important that you have documentation and prove up that you have a prior relationship before you actually start this general advertising for the testing the waters. So again, to recap, and this is different than what you could do in the past. In the past, it was not legal. They call it priming the market. Now you can test the waters. You can get out there. You can see if there's potential investors interested, even if you end up doing a Regulation D 506B. However, that does not change the fact that you have to only accept investors that you have a prior relationship with. You can run concurrent offerings where you do a Regulation D 506B side by side with the Regulation D Rule 506C. Rule 506C allows you to advertise market general solicitation, but you have to verify all investors are accredited investors. Those are that have a net worth of $1 million or more, not including their personal residence, or make $200,000 a year individually or $300,000 per year with their spouse. So, in summary, if you have a potential opportunity that you're just thinking about, start marketing today. Start reaching out to the potential investors. Feel free to reach out. We can help you set up a landing page for testing the waters. What it does is the landing page describes your investment. It has a contact information fill in. Potential investors put their information in and say, yes, I'm potentially interested in investing with you. None of this is binding. But then once you figure out what your securities regulation that you're going to rely on is going to be, then you can follow up with those potential investors as long as they're suitable and match the regulation that you ultimately go with. If you know which regulation you're going to use, you are required to stick with those rules. Testing the waters is really before you decide which investment regulation you're going to be relying on. As an example, if you get a bunch of Uh, Indications of interest from non-accredited investors, and I'm talking about a bunch. It all of a sudden makes sense to do a regulation crowdfunding, regulation CF, that allows you to accept an unlimited number of non-accredited investors. You are limited to $5 million per year. Or if you are really getting high net worth individuals that are saying, I'm interested, then you want to do that Regulation D, Rule 506C. And if it's really just people that you already know are putting in their information, then the Regulation D 506B, which honestly, about 75% of all of the private offerings in America actually end up being, that's another option. But being able to put the information about what you hope to do, plan to do, think you're going to do, to see who's potentially interested, is a brand new opportunity that honestly wasn't there in the past. So in summary, you should be testing the waters the second you actually have potential investments in front of you. There are those disclaimers, put it on every bit of written material that you have. Once again, click the link below to download those disclaimers. The short one, great for social media. The longer one, great for pitch decks and business plans. But at the end of the day, you need to start marketing today. Start building your investor base. Thank you.